We've got Hemang Jani. He's the Senior Vice President at Sharekhan joining in on the show. Hemang, thanks for joining in. If you could just give us a perspective as to how much of a bearing the monsoon, which is seeming to become a bit of a concern, as well as the race for the new finance minister is likely to be on the markets in the medium to long term.
We believe that though definitely the monsoon being a little delayed is a concern, but it's a little early to take a broad call on the monsoon, because we have seen in the past also that sometimes the start of the monsoon is delayed by a week or 10 days, but then it makes up for the shortfall whatever is there in the early part. So I'm not too worried about the monsoon being delayed. But yes, as far as the finance minister is concerned, we all know how bad the sentiment is because of the policy inaction and the lack of any commitment from the government on the fiscal deficit or overall policy inaction. So definitely market would be looking forward to have a finance minister who has serious concern on the policy part and the sentiment part. So we believe that there is going to be some positive news on that front.
Right, Hemang, just looking at specific stocks, we've got Reliance Communications, which is under tremendous pressure today. The stock's off something like 5%. Based on a report put out by a research house. But to you, what's that counter going to look like? Do you believe Reliance Communications at current levels is an interesting investment to be making?
See, Reliance Communication definitely looks attractive from a valuation point of view, given the fact that the overall assets that they have and overall the client base that they have is quite big enough to justify this kind of a valuation. But there are a few concerns which have been highlighted, and we believe that in the current environment where there is not much of clarity about how the rupee INR USD will work out, or interest rates are not going down. So a company which has a very high level of debt, and the fact that they also have a exposure in the foreign currency, coupled with the fact that there is some kind of a maturity level in the telecom space, we believe that the counter will not really move up significantly from current levels. It might not have a big downside, but we believe that it will broadly move in a range of maybe about 50 to 75 rupees.
Hemang, it's been quite a choppy day for the cement stocks, and they have bounced back from the day's low. There have been so many concerns with respect to the oversupply, which is yet to be absorbed. The freight costs also have been rising, and now the CCI report on cartelization. What do you make of the cement sector?
We believe that there were reports of a major M&A announcement, particularly this JP Associates cement unit. There were reports that somebody would take over, and based on the price or the valuation at which that deal goes through, there could have been some kind of a re-rating, and which is why we had seen some good action in companies like Gujarat Ambuja, ICC, Ultratech Cement, and even some of the smaller companies. We believe that now that they have already run up in the last about 10 to 12 days, and this CCI report is likely to be out where they might really penalize some of the companies for cartelization. So there might be some weakness in that space. But overall, looking at the fundamentals and the fact that the quarterly numbers reported by Ambuja Cement and Ultratech were pretty impressive, we think that overall sector is quite positive. So one could use any dips as a buying opportunity there.
Hemang, just one very quick word on the banking pack. After yesterday's disappointing news from the RBI, how are you viewing banks?
Well, clearly the sharp cut that we saw was a reflection of the fact that there were a lot of expectations built up, and since nothing really happened, there was a quick sell-off. But I don't think there's going to be a significant downside to the banking sector as a whole, because overall in the next probably 2 or 3 months we're definitely going to see some kind of a rate cut. Bond yields also have suggested that there's not room for much upside from current levels, which is quite comforting. So at current valuations we are positive on the banking space as a whole.